Namaskar viewers, hello and welcome to Sansad TV. I am Tina Jha, you're watching Perspective. US Federal Reserve Chair Jerome Powell's stark message that the US Central Bank will likely keep raising interest rates in the coming months to stamp out inflation has sent global markets in a tizzy. The US markets ended significantly lower on Friday. Stock markets in Europe reacted sharply and slid. Most Asian markets followed suit and shed on Monday. Indian benchmark indices fell over 1% each on Monday, in sync with weak global markets and a sharp fall in IT stocks. So in Perspective today, we'll try and decode the Fed chair's comments with an eminent panel of experts. We'll look at the impact of stricter rate hike on American households and businesses, concerns about an economic slowdown, and also a spillover effect on markets and economies around the world. Pleased to welcome on this edition of Perspective three eminent panelists. So let me begin by introducing them to you. I have with me Mr. Alexander Slatter, Deputy Managing Director, US-India Business Council, Mr. Rajiv Mantri, Founder and MD, Navam Capital, and Ms. Deepshikha Sikarwar, Senior Editor, The Economic Times. Thank you to all my guests for joining me on this edition of The Perspective on Sansad TV. Mr. Slatter, let me begin the program today with you. Your comments on the Fed chair's remarks, which have sent the global markets, in a tizzy over the weekend, and it has continued in the Asian markets, in the Indian markets on Monday as well. What kind of impact is it going to have on American households and the small businesses particularly?
Tina, thanks so much for the question and for having me here on Perspective. It's good to be here with Deepshikha and Rajiv. We talked a bit about this, I think, almost 3 weeks ago now when I was last on the show. And I shared a view then that I thought the Fed was going to be quite resolute in raising rates and that the US economy was not in a recession, although that was something that some of the other panelists disputed. I think what data that subsequently has come out shows that the US is not in a recession. In fact, the US is creating jobs at a remarkable pace, despite growth numbers that are relatively flat. And so the Fed chair's remarks, I think, last week at Jackson Hole are, I think, perfectly in order, given what the US economy is facing. It's true that in the interim 3 weeks since we've last spoken, the growth of inflation in the United States is flatlined, but it's not decreasing. And I think markets got ahead of themselves when they thought that a flatline in growth rather than a decline in growth was going to be enough to push the Fed off of its commitment to reducing inflation. And so, look, I think Fed Chairman Powell spoke a bit about what's to come. The U.S. interest rate, the Fed policy rate's at a neutral rate, about 2.25 to 2.5%. By the end of 2023, Chairman Powell said that the future projections that Fed Reserve members have put out publicly, that it should go to about 4%. That means we've got to go almost double where we are today over the next 18 months, 12 to 18 months. And so I think we're going to see fairly aggressive rate rises, probably 50 to 75 basis points come September. And that's going to result in a softening of the economy, softening of the job market. Chairman Powell was quite clear where he said that he thinks that, at least in the United States, the drivers of inflation are both supply side and demand side, and that the Fed is going to tackle demand side drivers with higher interest rates. And what that means is that you're going to see a slowdown in the economy because that's what's needed to bring inflation to heel.
Absolutely. But the fact that what it means for an average American citizen, inflation is at an all-time high, and now with continued high interest rates, how are average American citizens going to brace with this double whammy?
So, Tina, it's a great question, but it's something to keep in mind, right? That inflation is the present threat, right? And it's running about 7 or 8% in the US. And that means that on an annual basis, whatever you earned last year is worth 7 or 8% less this year. And so there is a present threat where the incomes of Americans right now are being depressed, okay? Now, it's true that the wage rates are also going up, but they're going up at a robust pace, about 4 or 5%. It's less than the rate of inflation. And so people are falling behind. And so I think what the Fed is prioritizing now is short-term pain for long-term gain. And the idea is they see that the biggest threat to all Americans, and quite frankly, the biggest threat is to middle and low-income Americans from inflation, because those are the people whose incomes are most affected by what is effectively a devaluation of their earnings. And so I think the idea here is to help them And there is going to be certainly a softening of the job market. But again, in some ways, the U.S. economy can feel that, can deal with
Softening
that.
of the
It's
job
very different
market.
than India,
Let me
right?
bring in Mr. Rajiv Mantri here on that point. Mr. Mantri, your views on the contention so far that the United States is not in a recession because the labor market has been growing exponentially. Now, with the continued interest rate hikes, of course, that is going to be impacted. Could that force the American economy into recession now? Any change in the unemployment rates, could that push the economy into trouble?
No, so I think what we are experiencing is really the result of some extraordinary policy measures taken by most of the Western economies, including the US, a couple of years ago in response to the pandemic. And after an elevated period of ultra low rates, we saw some of the most extraordinary fiscal measures being unleashed. And the inflation today is a consequence of that. So while the mandate of central banks, most central banks today, is to control inflation, they are less sensitive towards the employment part of it, the employment impact of rate rises. But let's see. I mean, even the action taken by the Fed chairman of late, it was obvious to some constituencies, but there were others, holding out a little bit of hope that will he, won't he? And here we are, where they have taken the decision to continue with the rate hikes. So I think the impact on labor remains to be seen, obviously. And in case it pans out that way, I won't be surprised if again the central bank, under sort of pressure or looking at the overall picture, the overall economic picture, again it sort of does a course correction.
Certainly. So how it pans out is something that we'll have to wait and watch until the next interest rate hike is announced. But Ms. Deepshikha Sikarwar, considering the global spillover effect of the American economy and that we've been witnessing over the weekend, what is the kind of impact that you see on the Indian economy?
Well, the first round impact obviously is seen in the markets, and we saw how stock markets behave today, how rupee behaved today, dropping to a record low. And going forward, I mean, what seems like from Fed's speech, Fed's statement is that it is not done with the hikes as markets were sort of expecting. So going forward, this hawkish stance is going to continue going forward. So dollar is strengthening, interest rates are rising in the US. So there would be pressure on portfolio flows. Now, as we know, flows have turned positive in July, mid-July onwards. So now the expectations is obviously there would be some outflows again. Now, if the rupee continues to drop like that, RBI may be forced to further raise rates, though inflation, has sort of is moderating gradually. But this external situation, and if you remember, Tina, governor in his policy statement had said, had raised concerns about the external environment. So that is going to drive the policy decision of the RBI going forward. How does the economy look like to withstand these? It is much better placed than it was in 2013. We have large reserves, and we are seeing that RBI is sort of at times intervening in the currency markets. With regard to inflation, it has begun to trend downwards. In terms of production, Kharif, we've seen sowings marginally like behind now. There is a slight deficit, but hopefully, probably that will get corrected. So in terms of the supply side, because India's inflation sees larger pressure from the food side, that looks to be moderating. And but one of the key concerns is crude, which has begun to see some uptick now, although in terms of the estimates of RBI has taken a level of 105. It still is below that level. So that is one concern which is emerging. So going forward, definitely it will it will require sharp management by the policy makers, and of course the currency and the stock markets will continue to see pressure. So we have to see how policy makers will manage going forward.
Certainly, and looking at how the situation, Mr. Mantri, is panning out in the US, in economies across Europe and worldwide as well, in the wake of how interest rates are being hiked, is there also pressure going to be on RBI?
No, so I think like all emerging markets, India will also feel the heat. But I agree with Deepshika that we are well prepared, we are well placed to sort of handle the eventualities that will come from this decision by the Federal Reserve. We have large reserves, large foreign exchange reserves. Inflation in India is being sort of mitigated, as the latest readout had shown for July. And even some of the welfare programs that the government is carrying on. So the provision of free rations, which has been further extended. These are all ways for the government to provide relief to those who need it. And I think on the energy front too, the kind of news coming in from Europe is not heartening. So large European countries are staring at a electricity-free winter, which would be extremely difficult for them to endure. So other countries, even the advanced economies in the West, are going to face all these challenges. But I think India is fairly well placed to weather this storm.
Also, amid serious concerns that withdrawal of foreign funds could have serious implications, how do you see us dealing with that kind of a scenario? Because in our recovery post-pandemic, the inflow of funds has been a very, very strong indicator.
No, so most definitely the kind of records selling in the equity markets that we've seen since October of last year, I think about $35 billion of sales has actually obviously never been witnessed in Indian equity markets. But that was the silver lining there is it was kind of balanced by the sustained inflows from Indian households, from domestic investors. And that honestly, it's actually a pretty new thing for India to experience this, because when the last time we saw selling on this scale during the financial crisis of 2008, the index itself had corrected by over 60%. This time too, obviously, there was a substantive correction, but by and large, the indices have held up, and the larger companies have all held up because of domestic savings getting financialized. So I think, all these just point to the structural shifts happening in the Indian economy, where households are now parking their larger share of savings into financial instruments, looking at exchange traded funds and other kinds of passive investment instruments, which was not happening earlier.
Absolutely. So even though, there is going to be some kind of an impact because of what's happening in the US, we are a little better placed in terms of stability. That's what we can say. Coming back to, what's happening in the US, Mr. Slatter, a lot of economists have now raised concerns that continued interest rate hikes, of course, is going to increase unemployment in the country, and that has once again sparked fears of recession, something that has gone to the back burner. Has that been well thought of before, such an announcement was being made? And if unemployment goes up, what are the implications that it could have now on the American people?
Tina, again, this is a point that I think I made when I was on the show in end of July, is that we have to take each economy in its own context, right? The US and Indian economies are in very different places. The US economy right now is experiencing record low unemployment, record low. It's at about 3.9%, okay? That's in India, the estimates are hard to come by. It's probably double that, all right? So that's a key difference, right? So whereas in India, it's very important to continue robust growth, and we think that that's probably likely to happen. In the United States, what seems more important now is arresting inflation. And one of the ways that you arrest inflation through demand side focus is by raising interest rates. And an outcome of that is to often raise unemployment. And so the US economy, I think at this point, can afford a rise in unemployment. Now, that's easy for me to say. I'm not a person whose job is likely to be threatened by that. And of course, there will be people who ultimately lose their jobs as a result of this. And so the key here is to do this in a calibrated way that will help folks who lose their jobs be cushioned by social insurance. And so there may be work for Congress to do to help those people out. But at the same time, that gives the Fed some breathing room to continue raising rates to arrest inflation. And so there's going to need to be coordinated policy action in the United States. In India, the rising rates by the Fed are also going to put pressure on RBI to raise rates. And I think you've seen this actually in the last 2 weeks as well. There's been 3 straight quarters where inflation in India has exceeded the upper band of targeting. And that's forced RBI to come out and state publicly what its actions are going to be to reduce rates. To reduce inflation. And I think we'll see rates rise in India as well going forward. And so the balance here is going to be how do you keep growth robust as those rates rise? It'll be a similar trade-off that the United States is facing. And there are steps that the government here can take, specifically by keeping demand robust. That'll mean strong spending in the new budget that's coming out in February, completing the expenditure plans that they put forward in last year's budget, moving forward with direct overseas listings rules that will help promote U.S. investment in Indian startups that have had great success, and also working on public procurement rules here in the United States, where you'll allow foreign companies access to government contracts, which will really allow them to access the full demand force of the Indian market and make it a much more attractive place to invest for them, which will help buttress the rupee and promote growth.
Okay, Ms. Sikarwar, do you think, with the manner in which external pressures are building up, most likely the RBI will also have to increase rates? And what could that mean for our economy and our robust growth? How are we going to balance that?
Tina, when the external situation becomes too challenging as was anticipated, the central bank had cautioned that, these challenges could be there going forward. It had taken into account when it was making that statement. So I think RBI will also be forced to take what the Fed statement has been going forward, and the pressures already visible. It will have to be very watchful of how the flows look like from the country. If there are massive outflows, if the money is really sort of moving out of the country and the currency is under pressure, it will be forced to harden rates, even if inflation remains stable. Because obviously managing the external front would be a key priority for the central bank, because that also will have, any appreciation in the rupee would obviously feed into inflation, which RBI is trying to contain going forward. So I think going forward, RBI will be watchful on that, and that will have some implications for the growth. How the developed world, how the developed economies sort of move forward. If there is a slowdown happening there in the developed world, it will impact our industry as well, because these are the key export markets for us. So we had begun to see some impact on the exports. So going forward, that would be obviously that sector might get impacted going forward.
Certainly, but Mr. Mantri, despite these global headwinds which have persisted since the pandemic, and then even as an aftermath of the Russia-Ukraine war, Indian economy has so far emerged as the fastest growing economy. We've been able to see some kind of positive growth despite all of these challenges. But in the wake of situations like these, where external factors will have pressures on the domestic economy as well, how do you see us dealing with the economy in the coming few years, which are very, very crucial for us?
The way I see it is that we have to keep working on our own competitiveness. There is only so much that one can do about these short-term external shocks. I continue to think that much of India's problems are actually energy-oriented. Fortunately, we have achieved self-sufficiency in food supplies, and we'll continue to have that despite the issues with the wheat supplies and rice supplies that are emerging. But on the food front, I think India is quite secure. On the energy front, where we are large importers, that is the issue that arises for us. And that is where the oil shock had really thrown things off for a few months and caused an inflation spike. But we are doing everything we can in the medium term to address this problem in the medium to long term, whether it is going for ethanol blending of fuels, whether it is pushing electrification of the transport system. So the good news is that, in a way, the oil shock has been like a further catalyst for policy action and for governments to realize that we should gain kind of self-reliance in this very important domain on which the economy depends.
Certainly. So we are going to feel the pinch, but so far we've been stable, and that's what puts us in a very, very different position. Mr. Slatter, the global economy is facing a challenge which perhaps is one of the worst that it has seen in decades. Are you convinced that with the kind of policy decisions that are being taken today, especially in the United States, and which, in turn impacts the global economy, is headed the right way?
So again, I think this goes back to what I said at the outset. You're battling multiple challenges. You have a supply side shock that's caused by Russia's invasion of Ukraine. You have a demand side push that's coming from stimulus and people changing their consumption patterns based on a new approach to COVID, and again, supply adjustment to that. So we've got to remember where we're coming from here, and that inflation threat is the bigger threat right now than slower growth. Growth is important for a variety of reasons, but again, inflation is the greater threat. And again, I think that you see Indian policymakers taking this quite seriously as well. Just look at what the RBI has said recently, and look at how the RBI has raised rates, and look at what the RBI has said very recently about its future likelihood of raising rates. I don't think we're done here in India. I think it's coming. And I think that, again, there's got to be, like in the United States, where there has to be coordinated policy action between Congress and the central bank to ensure that those who are forced into unemployment have a social safety net for them. In India, there are things that can be done to keep demand side high and promote growth even as rates rise. I talked about direct overseas listings. I talked about public procurement. Also finalizing the national logistics policy, which will help make, again, India more attractive for foreign investors and reduce costs internally for moving goods around the country, and then also investing in a US-India energy partnership. I think that Rajiv was talking a bit about this. There are lots of things that we can do together to reduce dependency on fossil fuels, and also in the short term increase access to fossil fuels, especially since the United States is a huge exporter of natural gas. But again, in the longer term, it's important for us to mitigate climate change, and that's to reduce emissions. And I think that there's great partnerships possible between the United States and India, where US financing can help us support the expansion of renewable fuels here in India, renewable energy, pardon me. And I think the government's push into green hydrogen, you see governments around the world doing this, can also be very productive in the medium to long term.
Certainly. So lots of areas wherein we have been working together, but there is huge potential in several areas that you've spoken about. Ms. Sikirwar, conclude the show for us in terms of the way ahead, the prospects of the Indian economy.
We are definitely well placed as an economy. Like I said earlier, we've seen such a turbulence in 2013. As an economy, we've done better. Forex reserves are well placed. Inflation's moving on a downward trajectory now. Recovery that we had seen seems to be stable so far. And the India is expected to grow 7% plus. 7.4% is the estimate, average estimates, if we take a number of agencies. So India, if you look at the global, it does look much better going forward. There are going to be huge challenges for the policy makers as the markets feel the pressure of what's happening globally in the developed markets. When central banks, continue with tightening. So rupee as a currency will remain under pressure. This markets could see capital outflows, and that will have ramification for the stock markets. RBI may be forced to raise rates, and industry and everyone needs to brace up for that. So to sum up, I think we are very well placed, but there are challenges for the economy going forward. But I think policymakers are keeping a very close watch to address those challenges.
Absolutely. And keeping those challenges in mind, what's the most positive thing about the Indian economy is that we are set to grow at a 7%, as Ms. Sikarwar said, not just in this fiscal, but if things continue and if we see robust growth in the next fiscal as well. And that is something that speaks about India's growth story, despite challenges like the pandemic first, then the fallout of the Russia-Ukraine war, and now some of these immediate global challenges that are continuing to impact the Indian economy as well. So that having been said, I'll have to wind up the program. Thank you once again to all my panelists for joining me on the program today, sharing your thoughts, your views with us and our viewers. Absolute pleasure to have all three of you on this edition of The Perspective today. Thank you very much to you viewers as well for your time. I'll see you same time tomorrow now with another topic and a different set of panelists. Until then, you take care of yourselves and keep watching Sansad TV.